Hi, Greg Stolby here. In this video I am going to explain all the settings in the ALR. So to get to the settings, if you want to change anything, instead of loading up the templates which have all the preset settings to do what the templates describe that the ALR will do, you can of course change the settings to suit whatever you are trying to do. There are many settings, and so I shall go through them all, and for those who want to know about them and who wish to change or modify any, then this will help you. So you click the smiley face, of course, and that brings up the settings. First of all, we have magic number, which is the same as any other EA, and you have to make the magic number unique every time you load it onto a chart. So make sure that is unique for every time you load it onto a chart. So every time you load a template, for example, then you must go in and edit the magic number and change it. Most people only run the ALR on one chart because that's really all you need, unless you have a much larger fund size which can handle more than one chart. So bear that in mind, because of course if you run more than one chart, then you are going to need more margin to cover all the trades and potential hedges that may be getting opened. So magic number, that's what it does. The main one here is this one here, which is the auto trade function. The auto trade function enables you to change and select the type of trading you want the ALR to do automatically. So the first one, if you select this, then the ALR will auto trade using the current trend direction. The current trend direction is shown by the purple and blue trend line. If you can't see the purple and blue trend line, that's okay, because the ALR has its own trend line built into it, and it is reading that line, not the one you can see visually. The one you see visually is actually an indicator of the very same code overlaid on the chart, so you can see what is going on, just for your information. But the ALR uses its own one internally. So whenever the color changes to purple or blue, then that is the current trend direction. And even if, for example, if the trade had to open, say, somewhere down here, then it would look at the line, it would be purple, and it would place a sell signal. So, and of course when it's blue, it will change and select a buy signal. So that's what the current trend direction does. The auto trade at change of direction means that when the color changes, then the ALR will place a trade. If the trade closes and there's no change of color, then nothing will happen. It won't trade or place a new trade until the color changes. For example, from here to here, blue to purple. Now, during the change time, there's sometimes some flickering on the candle that is being drawn at the time. So to avoid wrong decisions being made, we have this setting down here called check temporary signal. That means check the current candle, which is a temporary signal, because it's going to be changing all the time until the candle becomes fully drawn when the candle closes. And so only then does it place the trade depending on the color of the candle, because we have set it to false, which means that it uses the color of the candle of the previous candle and the current one, which is being closed. If they are the same, example, two reds, the trend line, two purples on two candles, then it will place the sell trade. If the two candles have been the same color of blue, then the ALR will place a buy trade. If the color is different, then it won't, because that means that it's indecisive of what the trend is doing at that time. So that is a good way of selecting the correct trend direction, i.e. using 2 candle times to determine the color of the trend line. If we had this set to true, then it would use the color of the line on the current candle. Okay, so that is what that does. That's the change of trend direction. So the ALR will only place a trade when the color changes direction, such as here and here. And let's see if there's any more. Not much good examples. And up here you can see a change here, blue to purple. So you would know that it would change, it would place a trade here at the purple line after the second candle. It's changed to purple, 2 candles have been purple, so it looks like a good time to place a sell trade. And of course it was, and it went all the way down. And so you would have got a good trade out of that. So it's a good choice of strategy. So that's the change of trend direction. The market move alert is when the market starts to move, the ALR will detect this and it will place an arrow on the screen to show you that it's changed, and it will use that arrow and detection of market movement to place a trade. It won't place a trade unless there is a move in the markets. So that's what the market move alert does. Whenever there's a move in the market, it will place a trade, and it will see that trade all the way through to the end, and then it will wait for the next move in the market, and then it will place another trade, whether it be buy or sell, depending on what the arrow is, what way it's pointing. The buy-sell strategy, this one is chosen, and which will tell the ALR to place a trade, a buy and a sell, place 2 trades, one a buy, one a sell, and one will obviously win because it has to go to buy or a sell, and the other one will of course not win, but it won't lose. It's set up with the settings so that it goes to break even. So one will win and the other will be taken to break even, therefore leaving you with the profit of the one that wins. So in summary, just to recap again on the buy-sell strategy, you pick this option and the ALR will place a buy and a sell at the same time on the same chart, and one will go to profit by hitting the green line here, and the other one will be obviously in the wrong direction, and it will be taken to break even. And that's what the ALR does. It takes these trades to take profit or break even, and that's what the buy-sell strategy does. I quite like that one, and it works very well, as do all of them. But everybody has their personal preferences. The reason I use the OCO strategy, which I shall explain, is because I was using the buy-sell strategy as my personal favourite, but I found sometimes if the market went quiet, then the trade that was being taken to break even might take some time to get there, and I didn't want to open any more trades until that was closed, or in fact the ALR won't open any more trades until that one is closed. So I found it better getting more trades by using other strategies, but it's very safe and always works, and so it's a good strategy for using the buy and sell. So going to the one that I personally like is the OCO. I personally like it because for my 225 Dow trade, which is at 25 past 2, the market does nothing because it's waiting for the 2:30 market open time, so it is hovering around a middle of the road, going nowhere price. So the OCO strategy, which means order closes other, or order closes order, it depends who you ask what it means, and basically what it means, it places a pending buy and a pending sell trade. So no trades have been placed as such, just a pending buy and a pending sale, a certain number of pips from the current price. I'll show you where that is in a second, where you can change that setting. The you set the pip distance so that it can give enough space to move in between it before it starts to move in the direction that the market is moving. Once it starts moving and breaks out of that ranging sideways, going nowhere position, then the OCO strategy will catch it, because it will breach the pending buy or the pending sell, and it will close the one that isn't breached and open the one that is breached, and that will open a buy or a sell order for you. So you'll have a buy or a sell order opened up in the right direction that the price has decided to go. So that's what the OCO strategy does. So I use that at my 225 Dow trade, because at 230 it all kicks off and the Dow starts moving, and I want to catch the right direction. And so when it starts moving, I make my OCO distance just enough for it to enable it to zigzag up and down while it makes its mind up of what direction it's going. Once it makes its mind up what direction it's going, the pending buy and pending sell orders are there to catch the respective one, and the other one is closed. So that is what OCO does. So that's your auto trade options. The templates have got these already set up, and so you can just simply choose a template and it will have all these settings set up for you. You don't have to change these things yourself. I'm just going to explain what they all do. So okay, auto lots. This is where the auto trade lot size is set. If you place a trade manually by using the buy and sell buttons, the ALR will use the settings in here to take that trade to profit by hedging its way out if necessary, and it will use down here the main lots size. That's where you put the size for the manual buy and sell. That's the lot size there for that. If you change this one, then the ALR uses that more when it's auto trading. Okay, delay 3 seconds means that once it's opened a trade and it takes it to take profit, then it waits 3 seconds before it opens a new trade. If, for example, you're using the current trend direction, then it will wait 3 seconds once the trade has been closed in profit, and then it will wait 3 seconds before reading the trend direction to open another trade. Just gives it all time to it's not important, it just gives it time to breathe between opening and closing, or closing and opening a new trade. Break even close. Break even close means that after a session time, which is a trade time, which is set down here, then if you decide you want your trade just to close and get to break even and not try and reach for a take profit, then you set the break even close to true, and you can tell it how much money you are prepared to let it lose or gain or break even. So 0 means that I'm happy for it to get to break even and just close that trade down. Take, for example, you've reached the end of the day and there's a trade still open and you know it's not going to go anywhere and you want to close things down for whatever reason, so you can set these settings during the trade and they take effect during the trade. So bear that in mind, it's important. You can change these settings and the ALR will read these and put them into action during the trade. So if, for example, this was set for false and the ALR were trying to reach for take profit, but you wanted to step in to get out of that trade, then you could put in here, say, I'm happy to take minus £10. I'm happy to lose £10 just to get out of this trade quicker, or you can put in 0 and it will just reach the 0, reading the number down here. It will read minus 10 or 0 or whatever price you put in, profit you put in there, and it will close the ALR down at that time at that value on here. So I might want to make just £10. I'm happy to make just £10, and it will close it down at that. So that enables you to override what the take profit is trying to reach for. Okay, ADR over rule. When you set the ADR over rule to true, it means that the ALR will only trade when the ADR value, which is down here, 2905 in this case, it will only place a new trade when the ADR value is over the number that you have in here. So that means you can put a sensible number in there for the ADR at healthy times of day. Take, for example, the Dow. I have it set for 1100 because I know that under 1100 ADR the market isn't moving that much and we can't get much out of it. So I know that over 1100 there is enough movement in the market for us to reach take profit and get something out of it. So we're not wasting our time placing trades when the market is going nowhere. So this ADR over rule will override everything, including the times of day, and it will only trade when the ADR is over a certain value, and it will keep trading over and over again until that ADR value is lower than the number in here. Then it will stop trading. It won't stop trading in the middle of a trade, of course. It never does. No matter what settings change, it will only not place a new trade or a new order. It will always see any trade to the end. It will never stop in the middle. It will always get to the end. No matter what time of day you've set for the end time, it will always get to take profit, and it will work its way to take profit even after your session end time. The session end time is the times you want it to trade between, and it will only place new trades if that time is true. And the same applies to the ADR value. It's the same rule for the spread over rule. Again, when the spread is less than this number here, it will place trades. If the spread happens to be over this number, then it won't place any new trades. High-low distance. High-low distance is just before I continue, in version 12, I will be adding a new feature to the ADR over rule so that it can work in conjunction with the start and end time, so that you can say trade between this time and that time, but only if the ADR is above this number. So the trade times will look at this ADR value, and it will only open a trade if the ADR is over a certain number in here that you have chosen, and it will trade between these times. Currently, just now, like I said a minute ago, this overrules even the trading times, but I find that it's better to have the ADR in conjunction with the trading times, so you could tell it when to trade during the day or whenever you wanted to trade as per your time zone, and consider the ADR as well, because it's very important that we only trade at busy times. Otherwise, you're not going to be able to get much from the market if the ADR is low. Anyway, so that's just an update on what's coming in version 12. The other thing, just while I'm on the subject of version 12 will include a note at the start of the ALR opening, and it will tell you that your fund is not large enough to cope with the number of hedges that it may want to reach in a worst case scenario. So what I mean by that is, when you open the ALR, it will look at your fund. It will determine from the size of your fund whether it can support the number of hedges and the multipliers of the hedges in order to cope with the margin requirement for covering the hedges up to 8 hedges. 8 hedges was chosen because 8 is a really rare position for it ever to get to, and so we see that, or consider that, as a worst case scenario. And so if your fund cannot support the lot sizes of the minimum lot size allowed, which is 0.02, because 0.01 is too low because it makes a 3-figure decimal point 3 decimal place number. We need 0.02 is the lowest we can use for lot size, but if your fund can't support 8 hedges using 0.02, then it will tell you. So you're warned, because if you continue and it needs to reach 7 or 8 hedges for whatever reason one day, as I say, it's very rare that it does, but it might do one day, and we have to accept the fact that that will happen one day, then you want to be sure your fund can cope with that. But if you continue and disregard that, then chances are it will work fine, because it only hedges once or twice or 3 times on average. It never goes past 4 or 5 or 6 very often at all, never mind 7 or 8. So the chances are you'll be fine. But it's just letting you know that if it needs to reach 8 hedges, if the market goes quiet and just ranges sideways, for example, for hours and hours or days, then it might need to hedge 8 times in order before it moves to get to the take profit. And if your fund can't support that, then the ALR cannot place a buy or a sell hedge. It's not the software's fault, it's just the fact the fund is too low, and there will be no fund left for the ALR to place the necessary buy or sell hedge in order for it to reach the take profit. So that is why the message is there, because of course if it can't place a hedge, then it's going to lose, because the price will be going in the wrong direction. So we need to be able to cover all the worst case scenario hedges. So that's what version 12 will do. It will warn you if your fund is big enough to cope with that. So back to where we were, high-low distance. High-low distance is based on the ADR for the day, the ADR average daily range. Every day has a range that the price will go to. We can read that from the markets, and we can use that information to help with this feature. We know that the price will go to a certain high position or a certain low position for the day, which is great information to be able to read, which is coded into the ALR, and it reads this and can determine from that data the maximum position or minimum position that the price will ever go to, which helps us greatly, because we can then put a number in here saying that, and if we set this true, then it's telling the ALR not to place any new orders or trades if the distance from the high or low, or maximum high, maximum low for that day is this number of points or pips away. There's no point in placing a new trade if this is down very low, because the ALR, as you see up here, for example, this is the wrong one because it's 0.2 decimal place. But in the numbers up here, the zone size, for example, and the take profit, it will never reach take profit, for example, if this number is set too low. So you set it to a number, or it is set to a number that is sensible, and that the ALR can get something from that range between this number and the maximum or minimum for the day. So it's protecting you. All these things are protecting you from taking trades, or the ALR taking trades at poor, weak times or bad market times during the day. So it reads the ADR, it reads maximum and minimum position it will ever go to for that day, and it will not place a new trade if it's not got a lot of movement to get to that position. So you only trade at the best times. That's basically what it does. So that's what a high-low distance does. Okay, next one. Okay, for the exclude Sunday data, that's just for the high-low distance calculations. So we move on to the filter sessions. This is the setting for times of trading. We have 6, as you see here, 6 times of the day that you can set the ALR to trade between. Like I said before, if the end of the trading time comes around, but a trade is still open, the ALR will take that trade to completion. So it won't just stop. Okay, so you set your times, and you must use the time on the chart, not your clock. Use the time on the chart, because the broker's time may be different than your clock time. So use the time on the chart that you want to trade between. Set your start time up and set your end time up so that it trades, for example, between 8 a.m. in the morning and 5 in the evening. You can set your 8 a.m. in the morning using the 24-hour clock, and the 5 p.m. in the evening using 24-hour clock, using the time here. Now, 8 a.m. in the morning may not be 8 on the chart. It may be 8 a.m. in the morning for you on your clock, but that might be 2 hours ahead on your chart, depending on where your broker resides. So that would be 10. So when you put 10 in here, that equates to 8 down here, i.e. your time. So bear that in mind. Use the chart time, not your clock time. So you have 6 sessions that you can set up to trade between. That takes us down to the time frame, which is basically using the current time frame that you're looking at, like in this case the M5. It uses the change of color that I mentioned earlier on for the trend line, uses the current chart that you're on for that change of color, and the check it works in conjunction with this check temporary signal, which is, as I described before, check the current change of color of a trend line compared with the previous candle's color, and if they're the same, then we can assume that it's going in that direction. And it uses the current chart to decide that. If you want, you can choose a different chart to decide the change in direction. You may wish to watch it on the M5, but you may wish to use the M30, for example, the H1, and 2 candle changes there for it to make the decision that the trend has changed, and therefore automatically place a trade in that direction. Or if you want to use a higher time frame, such as the H1, the hour, then you might just want to use the current candle, because 1 hour of time passing and the color of the candle changing for that hour, it may be enough for you to decide that that is the direction it is now going. So that's the choices you have there. Right, the no lag MA, that is the blue and purple line you see on the chart there. You don't need to change any of these settings except maybe this one, the NLMA length, which is the sensitivity of the change of the purple and blue lines. It's up to the individual to decide if they want to change this, but you shouldn't really need to change it. Basically put, the lower the number here, the more sensitive it is, and you'll get more purple, blue, purple, blue, purple, blue lines as the trend slightly changes as it goes throughout the day. If you make it a medium-sized number such as 28 or under 50, that's a medium-sized number, then you'll get an effect like this. If you make it higher, such as 128, pick a number, 128, you will notice that nothing changes here, because, like I said before, it is coded internally to observe that setting. If you want to see that setting, you have to change the indicator for that trend line, which is this one here, the no lag MA trend line, and we change it to the same number as we have in the ALR EA, and then you can see what the ALR is seeing. such as this. And you can see now that the line is changing colour less sensitively than it was previously. I'll just show you this. Okay, purple, blue, purple, blue. Okay, it changes less sensitively and follows the trend. However, it's a bit more delayed than it would be if it was changed to a lower number, such as 14. Let's say 14, and what happens? You see there, it changes much more sensitively to the change of direction of the trend at that time. And so the reason for doing this is so that the ALR, when it's automatically trading for you using the trend line, it will base its decision on the trend change of colour. So the different number you use will determine how the ALR will make its decision and whether it places a buy or a sell. And so you may want to have quick trades over a few minutes, and so you set the length number lower, so it's more sensitive, and you get a much shorter time frame between, say, here and here. As you see, it's only about 20 minutes between here and here. Sorry, I'm on them. Sorry, I thought it was on the M1 there. I'm on the M5. But it stands the same. It's a shorter time before it changes. Where if you had it on the H1, it works in the same way. But of course, the change from here, then changes colour, then changes colour here, is several hours. But that might be the type of trade you want to take. You may wish to take long time trades over hours and get big moves such as this is 24,000 points, and that can be achieved. So you can set the ALR to trade using the trend line as it currently does, using the options in here. And if you wish to place a trade at the change, you select that one, change of trend direction, hit OK, and then you now know that when it changes colour from blue to purple, based on, again, the first current candle or the second candle to confirm the change, then it will place a trade here and it will stay in all the way down until here. And so that is one way of trading to get the longer moves. If you want to do shorter ones, you can use the M1 or the M5 and use the 14 setting as I did here. For example, that 14 number gives you this sensitivity on any time frame. But you have to remember to also do the same in the ALR, because it uses its own NLMA length. So you need to change that to 14, the same as what you're visually seeing. Okay, that's that. Right, market move, I mentioned this earlier on. It is an option in here, the market move. The ALR will place a trade when the market move alert appears, and it won't place any trades until the market move alert appears. Now, these settings don't need to be changed because I have optimized them to be the best, so just leave them alone. You don't need to know what they are. If you change them, you'll notice the arrows appearing on the screen, which will change in position, but these are the best positions for the most optimal, best entry points that I have worked out for you. So the market move arrow alert will appear, say for example down here saying take a buy, take a buy. The ALR would place a buy here, and of course it would go up and it would take it'd hit your take profit, because it would work out the best take profit position based on the calculations and formulas built into the ALR, including such things as the ADR for the day, etc. So you know that when a market move alert appears, the ALR will place a trade, for example down here like I said, and it will take profit at the best, most optimal place. You don't have to determine that, the ALR will do it for you. So there you go, that's the market move alert. It will alert the ALR to take trades at the best, most optimal, best entry point position, such as down here for example, or up here, and it will therefore be able to get the distance required to reach the take profit that it has automatically worked out and set for you. Okay, no lag MATP. This works in the same way as the previous no lag MA with regards to the settings of these things here. It works in the same way, but the purpose of this feature is for the ALR to close when the trend line color changes. So it will open at the color change and it will close at the next color change, based on, again, the first candle, current candle, or the previous candle, like I described before. That's what this check temporary signal setting does. It tells the ALR to look at the current candle compared with the previous candle. If it's the same, then count that as a change in color. So the NLMATP is take profit when the trend line changes color, and that's what that setting does. So you can, for example, set this to auto trade at change of trend direction. If you do that, like I said before, when the trend direction changes, then it will place a trade and it will not close at the TP worked out by the formula like normal. It will wait until the color changes, i.e. the trend changes, if you have this set to true. So if it opened a trade here, for example, when the purple changed to blue, it would open a trade here, and even if the TP was set for here, for example, the initial TP, it wouldn't take it, it would keep on going until the color changed here, and so it would take it up here, and so you get the full distance of the trend of the move at that time. So that's what the no lag MATP setting does. Again, this setting here is the only one you need to change, and it will be the same as this one, because the auto trader is using this one, no lag MA, and then it uses this one to close, this one to open based on that number and that sensitivity like I described, and this one to close based on that sensitivity like I described. So make it the same, 14 in this case, and you get that sensitivity, and that setting with this setting means that when the color changes, it will open a trade, and when the color changes again, it will close the trade. If you had set it for using current trend direction, then the ALR will open a trade at any point up here, but will not close at TP. It will wait until the color changes and count that as the TP and close if you have this setting open, enabled. So NLMATP take profit set to true will close the trade when the color of the trend line, no lag MA trend line, changes color. Okay, put it back. What's next? Buttons, pretty self-explanatory. Show the buttons, these ones here. it shows the buttons. The close all button here means that you can, if you want, close all trades that happen to be open. For whatever reason you might want to do it, you can press this button and everything will close. Just an easy way, and quick and easy way of closing any open hedges or trades. So for example, if I'm seeing this in profit just now, I may just want to go home or get out of the office, and just, yeah, I'll just close this now rather than wait for it to go up. I'll show you. Rather than wait for it to reach the green line take profit here, I'm happy just to close out now and take the £12 profit. So close all, hit the close all, and it closes all the trades and any hedge orders that are open and takes the profit that is here. So it just enables you to manually get out of a trade whenever you want. Okay. I mentioned the main lots. This is the lot size that will be placed or used when you manually place a trade using the buy sell buttons. OCO, I also mentioned the order cancels other or order cancels order, which when used will place a pending buy and a pending sell. This number of pips above the current price and below the current price, so that when the price eventually moves out or breaks out of the ranging situation that it's currently in, you will see the ALR automatically make that an order depending what direction it goes. So if it goes up, it will place a buy, it will close the pending sell. No loss, no money's been used, so there's no loss there. It will close that order, leaving one order open in a buy position, which is where the direction the price went. Alternatively, it will, if it goes down, it will trigger the pending sell trade and it will close the pending buy. That's what OCO does. So it enables you to get the trade in the right direction if the price was ranging sideways and you were waiting for it to break out, such as news coming, for example, and so the price was going nowhere until the news event happens. Then the price would go up or go down, and you'd have a pending buy and a pending sell waiting to be triggered by whatever direction it goes, and so you're always going to get it right. This is just positions of buttons and size of buttons you can play with if you want to change the position of these and size of these and colors, etc. That's all that is self-explanatory, which takes us to the trade options section. Okay, this section here, close all. This, when enabled, will force the ALR to close all orders that are open when the trade is being closed. Normally all orders would be closed anyway, but some brokers are difficult, and so this forces all orders to be closed. Sometimes when there's fractions or decimal places of lot sizes used, the brokers can be a bit difficult, and so we were finding in some occasions that when a trade was over and closed at take profit, some orders, small orders, were left open because the broker would not close them. So this forces all orders to be closed if that ever happens to you. So normally it's disabled, but you can use it to force close everything in case some things are not getting closed at the end of a trade. And this is just the time it waits after normal close to check see if there's anything still left open. Okay, the buy sell strategy. This enables you to present a button on the screen so you can do the buy sell strategy manually. So you wouldn't have it set up here, the buy sell strategy as I described what it did earlier on. You would have this set for disable, and you would set this buy sell strategy button to be enabled, and the button appears here. So that enables you to press the buy sell button when you want to do it manually. and it will place a buy and a sell at exactly the same time. One going up, one going down. One will go to take profit, the other one obviously will not, but it will be taken to break even, and so you're left with the profit. Okay. Next one. Here we go. Zone Auto Calc. This feature enables the ALR to automatically calculate the size of the zone that is best for the time of day you're trading, the current situation, the size of the market, the market conditions. So just leave this enabled and it will do it all for you, and make sure your zone size, which is between the dotted line here and blue, that's your zone size. It will work. You see it here, dotted green line, blue line, that's your zone size. It will work all that out for you automatically to make and give you the best optimal zone size for the market condition at that time, therefore minimizing the number of hedges that could potentially be enabled if you were, for example, to have too small a zone, where the blue line was maybe up here, for example, and the green dotted line here. Then the zigzag, as you see here, the zigzag of, say, for example, this and this, that distance would be bigger than the zone size, and thus would trigger unnecessary hedges before it got to its final destination to take profit, the green line. So you need to make the zone wide enough, but not too far away from the zigzag, like it is here. There's a zigzag there, up to here, and you can see that the zone is perfectly sized between here and here to miss the zigzag and thus not trigger unnecessary hedges. So it's very clever, very smart, and automatic. So just leave it enabled and it will do that for you. Therefore you do not have to work out what the best zone size is. The ADR or percent, this is a number that again don't change, because I have spent weeks, months, years, whatever, working this best number out, which helps in the calculation of the zone size and the take profit size, etc, etc. This is a percentage of the ADR that it takes and uses for the formula that is used to work out the zone and take profit and initial take profit. So it's all automatic for you. So again, you don't need to change that, but if you want to, then feel free, but do it on demo until you are happy with it. But it works perfectly well, perfectly balanced right now, so that the trades close and open at the peaks and the troughs of the moves, such as up here and down here. That's what the percentage here enables the calculations to determine. The multiplier, again, don't change that, because it's been carefully calculated to be as small as possible, so we have the smallest distance to go in order to make profit, in conjunction with the size of the zone and the current state of the market. I worked out again over several months the best number to use and the smallest number that was possible, and using the smallest amount of fund and margin and the smallest number of pips, so we don't have to wait all day for a trade to come in. This number here does all that. TPSL means take profit stop loss multiplier. So it is the take profit distance is calculated by this number based on the size of the zone, which is based on the size of this number here, based on the formula. Okay. Right, the ITP percent is initial take profit percent. This is a number that, again, over weeks, months, years of working out and testing and every single day, is the most achievable distance for the ALR to close and take profit from a trade when it has been opened, therefore avoiding any hedging whatsoever. So I have found that when a trade is opened, the move will continue on to this number of percent of the zone size. So whatever this zone has been automatically calculated to be, this 39% of it will be the distance that the price will move, and the ALR will close at that point, take the profit, and start again with a new trade. So this is the number I find is the most efficient and most regularly achieved position. 39% of the zone size, which is in keeping with the size of the market, the condition of the market, as per the zone size as I described. So 39% of that is where a move will move to when a trade is open based on the auto trade selections here. When they have made their decision to open a trade, then it will use these calculations down here, zone auto calc, this one here, this one here, this one here, to determine where the take profit position should be placed for the best reachable and achievable position. So it's not outlandish and crazy stupid numbers that will never be achieved, and also it's not too small so we don't get the maximum move. This has all been optimized after many weeks of work to determine the best, most efficient and maximum we can get from the market move based on the condition of it at that time. So that's what the initial, this one here, take profit does. If it doesn't reach the initial take profit, as you see, this is the initial take profit line here, because a trade has just been opened or was opened and hasn't hedged yet, is 0.02. This is a slow grow strategy I'm using in the background here. As I described earlier on, so it's made its zone size here, here's the zone. This is the initial take profit, which is 39% of this zone here. This is 39% of it. So when the trade was opened, I expect it to reach this here, and it will happen more often than not, and you will get a trade done, profit taken, without any hedging, and it will continue to do that. If it didn't reach the initial take profit line and reversed before it reached it and it crossed the blue line here, then it would open a sell trade, and it would then be reaching for the take profit number. The take profit number, which is, as we said, this one here, 1.5 times the zone size. That's what it would then be reaching for, because it has to, in order to cover the distance gone down here, which was the opposite direction of the buy trade in this example. So if it didn't reach this buy position and reversed, then obviously it's negative here, and it opens a sell here, and it has to go 1.5 times the zone to get to the position that it would make up the loss, or temporary loss, as it travels to get to the take profit. And so you always make profit no matter what direction it goes. That's how it is achieved. So no matter how many times it reverses back and forth, the multipliers that we have done in the hedging positions will enable it to take profit any time it moves up or down and reverses. So that's what will happen. Okay, I hope that made sense. So that was the ITP percent we covered as initial take profit, and then if it doesn't reach initial take profit, i.e. the first attempt after opening, then it uses the 1.5 distance because it has to, because of the distance calculated. But don't worry about all this stuff, it's all been worked out and built into the formulas to enable you to always make profit no matter where the market goes at any time, up or down, no matter where, no matter when. So even though you may see negative numbers in here while it hedges up and down, and it may hedge 1, 2, 3, 4, 5 times, for example, then one hedge is always kept open, of course, but the other ones are closed. We don't have lots of open trades. This is the lone hedger setting, as I'll get to it shortly. And so you will see if it hedges several times, your balance will be depleted during the trade, but will always be recovered and more by the time the trade closes. And that's why you do not ever close a trade in the middle when you think it might be losing, because it isn't. It will never and won't lose during a trade, no matter what you might see in here, a big negative number, and you see your fund being depleted as the hedges are opened and closed and opened and closed, as the price zigzags up and down, not reaching the take profit. Do not worry. It is normal. It's meant to happen. It's all covered and worked out perfectly, so that when it does eventually reach the take profit green line, all the previous closed hedges that have caused the negative fund depletion for that particular hedge order to be closed will be recovered, and the profit will also be made on top of that. So you're always going to make profit, no matter how many hedges are opened and closed and opened and closed, and no matter what negative number you see here, no matter what you see getting depleted down here, it will always recover. Do not think you know better, because without any disrespect, you won't, because it's been worked out perfectly well. So do not panic or think that it's failing or losing, because it isn't and won't, and will just let it go to the end of the trade, and it will bring you profit. Okay, I hope that all made sense. So that was what happens when it is in a trade and it uses these numbers to achieve all that. Right, the next one is this one. This is the minimum hedge distance. This is basically the minimum zone size you want the ALR to ever use, so that when it's calculating using the auto zone calculation, then it will never go below a certain zone size. Again, I have worked this out after thousands of hours of testing and trying and watching. So again, you don't need to change this unless you really want to. But that's what it does. This is the minimum zone size it will ever go to, and this is the maximum zone size it will ever go to when it's using the auto zone calculation formulas. The TP initial pips is the same as what this percentage thing was doing. The initial take profit is distance. So if you are not using this auto zone calculation, if you have it disabled, you can disable it so that you can use your own numbers to do what the zone auto calc was doing. So you can set your own take profit, initial take profit move that I described from here to here, and you can use the other settings down here for the zone size and the take profit size. So if you do not want to use the values in automatic settings up here, you can manually set the zone, which is this one here, hedge distance pips. That's actually the zone. Hedge distance pips is the zone size. You can tell it to use that zone size. You can tell it to use that distance for the take profit, and you can use that distance for the stop loss. So those are the numbers you use when you want to set the zone and the take profit manually. So I hope that makes sense. If you want to go into as deep as that to change the settings, then you can. As with all the settings in the ALR, you can change everything. But you may not want to. Most people don't, because it works perfectly well without changing settings and just using the templates. But if you want to, to tweak things, you can. Maybe you want to try and improve something or try something different. That's absolutely fine. So you can take off, for example, the zone auto calc and use your own stop loss take profit setting, and here and here, and use your own initial take profit setting, and let the zone be created by what you want it to be, which is this one here. I know it doesn't say zone, I should have maybe made it a bit more obvious, but that hedge distance pips is the distance between the edge of the zone, so that basically is the zone size. Okay. Hey, oh, I missed this one out. Timer overrule. This is never actually used because I put it in just in case a trade was opened and closed too quickly, because some brokers don't like trades being opened and closed too quickly. They see it as scalping and might close your account. So in the case that that might happen, not that it does, but if it ever did, then we wouldn't be affected by it, because the setting here, if you set it to true, then it would never close a trade or an order under 180 seconds. So 3 minutes would be the minimum time it would close a trade. So even if it wanted to close a trade, it would not be able to, because we'd have this set for true. It never happens, so I never have it set, but you can do if you find that you are maybe changing settings manually, whatever, and making a really small zone, for example, or a really small initial take profit, such as this one. If it was really small, then once the trade's open, it might reach this initial take profit really quickly, under 3 minutes. And so the trade would be opened and closed, and that would be regarded by the broker as scalping, and they may look into it and ask you what you're doing. So to avoid that happening, you can set this rule here to true and say do not close that trade unless it's over 3 minutes. So what would happen in that scenario that I gave you an example of, if it tried to close it under 3 minutes, it wouldn't be able to. The price would keep on moving, and once 3 minutes is up, then the ALR would close it, if of course it was in a take profit position. It wouldn't close it just anyway. It would do it properly and take it to profit as normal, but not under 3 minutes. Okay, maximum number of steps. Okay, the hedge max num steps is the number of hedges you want the ALR to go to. So it also counts the initial trade order placed, so that's not a hedge, that's the initial trade, so that's counted as one, and then all the other ones are obviously hedge orders. So you can put in here the maximum number you want it to hedge to, so you can therefore enable the ALR to not go beyond your fund size, because you obviously know the leverage your broker gives you and the lot size you will be trading, and thus the margin that will be needed at a certain hedge level. So you can put in here the number of hedges that it can reach, or your fund can reach, so you will never max out of your fund size. So I've got 9 in here for this particular example, because this is a slow grow template, and 8 hedges, as I mentioned earlier on, is probably the max that it will ever go to. It's very rare, but it could of course get there one day. So we put in 8, which means that you'll be safe to hedge day and night for a long time before it ever, if it ever does, reach 8. But I've got 9 here because, as I mentioned a minute ago, you include the first trade, the initial trade, which isn't a hedge. So that makes 9. Okay, you set this to true, max num steps to close. So when it reaches this number, it closes the trade for you. So what you could do, for example, is say, I don't want to go beyond 2 hedges because I think with my strategy 2 hedges would be the maximum it will ever reach, but if it ever does reach, I just want to close and take the loss, because of course if it reaches the hedge number here and just closes out, you will not have completed the trade, so therefore it could be, and probably will be, in a loss or losing position. But you might want to just take that loss and put it down to experience and carry on again. As long as you get more wins than losses of similar value, then you're going to be winning. So this is kind of like normal trading. You say, I want to just reach 2 hedges. I don't want to get any bigger than that. If I'm losing $100, for example, at hedge 2, then so be it. I will win more with the other trades because it's not going to hit 2 hedges very often when I'm trading. That sort of idea is for this setting. So you can force it to close at 2 hedges, for example, or 3 or 1, and it will then carry on trading using the strategy that you have chosen and carry on. So and take the loss of that particular trade if it hits the number of hedges you've chosen. So you can determine how much you want to potentially lose if it gets to a losing position by setting this. This is the percent, is the distance across the zone you want to count as a close. What I mean by this is by when it reaches, say, for example, in this case, the second hedge, then it won't just close on the second hedge as it opens the second hedge. It will wait till it travels across the zone in the wrong direction to open a third hedge, which it won't open, of course, but it will go 98% of the distance across the zone, therefore giving it a better chance to change its mind and go back into the correct position. I say second hedge, it's not a second hedge, this is this first hedge, because the first order is counted and the first hedge makes 2. So the first hedge, if it reaches the first hedge in this example and then reverses again, hasn't reached the take profit, then it's heading for its next hedge, which will be the second hedge, which would be step 3. So it's reaching for its second hedge, and it travels across the zone to get to the edge of the zone to open the third hedge, and obviously it won't. It would close down because you told it to close down here at 98% of the way across the zone. If you'd said at 10% across the zone, then it would have travelled in the wrong direction across 10%, then counted that as a close. So by giving it a big number, we're giving it more of a chance to get a reversal again into the correct direction. So if you follow what I mean, you've reached the hedge, the final hedge is gone in the wrong direction. It's going to open the next hedge, which it can't because you've told it to close, but it may reverse and then go back into the correct position or direction and close in profit. So you give it as much time as possible. So you're asking, well, why don't you just leave it like that as maximum distance, like 100%? Well, the reason you don't do that is because you lose a lot more money as it travels in the wrong direction. So it's up to you. How much do you want to lose before you decide that it's not going to go in your favour before it reverses, or if it ever will reverse? You could say 100% here, of course, or you could say 50%. 50% means that you've gone 50% across the zone, and you think, well, no, it's not going to reverse in my favour. Let's just close out and take the hit, take the loss. If you were to be bigger than 50%, there would be a bigger loss when you make that decision to close out. Okay. Controlled hedging. Controlled hedging means it uses these numbers down here, starting from here. Hedge 1, hedge 2, hedge 3, hedge 4, hedge 5, etc. So you're telling it to use these numbers here for the multipliers for the hedges. If you'd said no or false to that, it would use 3 and 2, 3 and 2 multipliers, which will make you in profit every single time, no matter what direction it goes, just like the others do, but it will just use the simple multipliers. Some brokers do not like the fractions or the decimal places, you see. which these multipliers have. So in order to avoid that, then you can use these numbers here by putting that to false. You don't really need to use that very often, but it's there in case you want to. So we set this to true, and it will use the first hedge will use that multiplier, then the second hedge will use that multiplier, and the third hedge will use that multiplier. These numbers are all being carefully excuse me, calculated to ensure that it covers the closing of the previous hedge and makes you profit as well, no matter what hedge it closes out on. So don't change them. If you do, you can, but and experiment with them, but thousands of hours of work have gone into making these the perfect numbers to ensure you get good profit and cover the losses of the previous closed hedges. So that's what these numbers do, and that's what controlled hedging does. You see, I've not gone past 9 because it never really goes past 9, so why bother putting multipliers in here? I don't want to ever reach this number. It very rarely does, but that's why it's up to there. Lone hedger. This is in conjunction with all these previous things I've been talking about. Lone hedger means, as it describes, lone single hedge only. It won't open the first hedge, then the second hedge, then the third hedge, and keep all previous hedges open like it did in the previous versions of the software, which works perfectly well, but the margin requirement is bigger because you've got more open orders. However, you're not in a loss situation at that point because you haven't closed any orders. The margin requirement is bigger, but you haven't lost any money during the trade like you will when you use the lone hedger. But you're not losing money, you're only temporarily losing or taking money or using money from your fund until you get to your take profit, where it's all recouped, as I said, and more, i.e. the profit. So this is what the lone hedger feature does. It keeps the margin down, keeps one hedge open only, closes previous hedges when a next hedge is needed to be open. For example, you've got one hedge, first hedge open, but it reverses and needs to open a second hedge, opens the second hedge, and closes the first hedge. Closing the first hedge means you lose some money at that point. And then again, of course, if it needs to open a third hedge, it will close the second hedge, and again, we'll lose some money at that point. But it keeps the margin lower, therefore your fund requirement is lower. And then when it finally reaches its take profit on, say, the fourth or the third or fourth hedge position, doesn't matter what, when it does eventually reach its take profit position, i.e. the green line, then the previous hedges that have been closed, no matter how many, will be recouped, covered, and you will make profit as well. So therefore, by using the lone hedger, you only use one hedge. You temporarily use your fund money to cover the closed hedges, but you will always recoup it and get more when the trade is closed. So that's why you don't try and intervene thinking you are losing when you see negative numbers here and your fund getting depleted. That is absolutely okay and normal and needed in order to run the lone hedger, and will always be recouped to be more than your fund was at the start, i.e. make profit. Okay. Hedge replace order. This is an option that you can use to never go past a certain hedge level. Say, for example, you do not want to ever go past the second hedge, so it won't ever open 3 or 4 or 5 hedges. It will always go to the second hedge and never go beyond that. Therefore, you are always in control of how much fund you're using, how much margin you're using, because it will never ever need any more than the second hedge. So what happens here is that when it gets to the second hedge, if it doesn't reach take profit and and the price reverses again, and the ALR has to open a third hedge, it won't open a third hedge, it will close the previous hedge, therefore putting you in the correct position, buy or sell, without opening a hedge. But of course you will have closed the previous hedge, and that will cost you some money. Not a lot, but it will cost you some money because it's travelled across the zone in the wrong direction. Then it has been closed in order to put you into the correct position. So the hedge replace order means that you can in effect keep hedging forever, but without opening any new hedges. It just opens, closes, opens, closes. The hedge that is currently on, that you have set it to, in this case step 2, which is hedge 2, not like the step before. It's actually, this is the hedge number. So hedge 2, I don't want to go past hedge 2, and it will open, close at hedge 2 when it wants to open third hedge, for example, but it won't. It will keep on going, opening and closing, and until the price moves to your take profit. Your take profit then will cover a lot of the closed hedges, but maybe not all of them. So that's why you have to have, how many times do you want to do this feature? How many times do you want to open and close, open and close, open and close the hedges? This will therefore give you a sort of virtual hedging setup. So if you put the number, say 4 in here, it will hedge to point hedge 2 position, and it will do it 4 times. So in effect, you could have got to hedge 2, 3, 4, 5, 6. You could have got to hedge 6 level, but you won't have been up at the margin requirement of 6 hedge level, i.e. this 29.5 multiplier of hedge 6 level. You will be still at 2 hedge level, which is 1.5. So your margin will be very, very, very small. So your fund can be very, very, very small. But of course, you will have closed 3 or 4 hedges before that in order to maintain the position to get to the 6 hedge, virtual 6 hedge level at hedge 2. And so you will have lost 3 or 4 hedges being closed. But if that's acceptable, that's all right, because say, for example, you may win far more than you actually encounter with this scenario of opening and closing hedges using the replace order. So it's there to let you control how much money you want to have as a fund, and how much money you want to use as a margin, and how far you want to get into a trade with regards to the hedge position. You tell it, stop at 2, open and close for 3 or 4 or 5 times, whatever you want, and then get out if it still is hedging and still needs to hedge, such as, for example, as a ranging market. It's going sideways, going nowhere. You've given it enough chance to get out and break out to reach your take profit. It normally will, but if it doesn't, then you just say, call it a day, let's get out, take the loss, and you have controlled it to hedge position 2. So you haven't drained your account of lots of money. You've controlled the position you want to get to for that number of times. Okay, so that's what this does. Now we're on to trailing stop. Just as it describes, a normal trailing stop. Enable this, and what will happen is you have various options of trailing stops down here using different methods. This one here means don't use a trailing stop if it's gone beyond, say, 4 hedges. Okay, so you can say use a trailing stop, which is settings are down here. I'll get to in a minute, but do not go past. Don't use a trailing stop if you're past the 4th hedge, because what happens at the 4th hedge, or whatever hedge, is the multipliers are higher. So therefore, you when the trailing stop, the way the trailing stop moves, works is that it has to reverse a bit in order for the trailing stop to be triggered. So when it reverses, you're losing some money, of course, at that point, before it triggers the trailing stop to stop. And so the higher the multiplier, the more money you're losing. So you don't want to be losing more than you're going to be potentially earning from it. So you have to pick a number here that is sensible. So that's why that option is given there. Okay. Okay, the distance pips, of course, how far do you want the trailing stop to reverse before you regard it as a reversal and stop. That's the number there. The step is just a step, which is the normal standard trailing stop step, which is step kept at 1. Activate by pips. Now, the activate